Are you looking to take your personal finances to the next level? You're in the right place. Welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not, with your host, Joseph Sangle.
Well, welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. My name is Joe Sangle, and I'm fired up to bring you another right now relevant podcast episode where we can help you in your journey with money. I'm joined, as always, with my co-host, Megan Hibbert. Are you fired up today on this Monday?
I am. Happy Monday.
It's June 14th.
Yes.
And we're episode number what?
154.
Number 154. That's about short of a couple episodes where you were, you built a child in your body, which is unbelievable. Logan.
Sure. I'm sure where you're going with that.
You took off, unbelievably, you took time off after having had him.
How dare I?
And we had some guest hosts like David, which was very awkward and hilarious.
Sweet
and
David.
my wife showed up on here a couple times. And short of that, you've been on nearly every one of these episodes.
Yes.
And this is going to be maybe one of the topics that is like the least favorite for people. I don't know if it'd be one of your favorites.
Tell everybody what we're talking about. Their least favorite.
Okay,
maybe
here we go.
It might be your favorite. So today we're talking about auto and home insurance. So our question is, insurance is one of the most confusing topics ever. Can you please help me understand more about what I should be looking for? Also, any tips that would help me determine the best deal would be awesome.
That's great. So insurance, is it going to be your favorite topic?
Well, if it saves you a lot of money, it might be.
So saving money is definitely one of our favorite topics.
Yes.
So really, it should be saving money on insurance, because 15 minutes or less could, well, you already know that. Guess what day it is?
And
you're in good hands and like a good neighbor and all that stuff. Yes, I know. It's great. But I love all the different commercials that happen.
Hey, they're catchy.
They are catchy.
That's what they
like
want.
the ant problem. I like the ant problem. Anyhow, before we dive into answering that question, which we will help you, and don't turn us off because this is about insurance and you think, my goodness, how boring could it be? Insurance is wildly important when you need it.
Yes.
And you can't determine what you need when the event happens. You need it beforehand. But we do want you to get the best deal, which isn't always the cheapest, but it's the one that is the best for you. We're going to help you determine that today. But first, we're going to go to one of my favorite moments. You know what time that is. Let's go.
Now it's time to get caught up with our current money events.
The Monday Money Tip Podcast is sponsored by the Fully Funded Life Membership Program. The Fully Funded Life Membership Program provides all you need to begin winning with money and live a fully funded life. Fully Funded Life includes 4 key components: courses, challenges, coaching, and community. Courses provide financial education. Challenges help you make massive progress in a specific money skill. Coaching is provided by the Fully Funded Life Certified Coaches through open office hours held multiple times each month. All of the courses, challenges, and coaching results in an outstanding community that help equip, motivate, and encourage you to take your next financial steps toward your fully funded life. Fully Funded Life. Courses, challenges, coaching, community. All that's missing is you. Learn more and receive a special offer for Monday Money Tip listeners today at fullyfunded.life/MMT. That's www.fullyfunded.life/MMT.
All right. Well, for today's current money event section, we're going to talk about the national debt again. So if you're watching on YouTube, well, from time to time, it's not like we never talk about this. So it's an again thing. Right now, I'm looking at it, and maybe you can see this. This is usdebtclock.org. It's a live view of the national debt. Do you see that?
I do.
How much money is that?
28 trillion.
Yeah, 28.3 trillion. And we scroll over a little bit, and it says per citizen in the U.S., how much is it?
$85,065.
Yeah, so if you're debt-free and you're listening to this podcast, just wait.
Think
again. If we equally divide the debt amongst every American citizen, that's $85,065. So Logan has $85,000 of debt. Isn't that awesome?
Yeah.
But however, not all citizens pay taxes. Logan is not paying taxes yet.
Nope.
So the debt per taxpayer is $225,310.
Get fired up.
Woo! So, they talk about the U.S. federal debt to GDP ratio, which is the gross domestic product ratio, what we produce in a year. In 1960, it was 52.83%. In 1980, it was 34.59%. In 2000, it was 57% again. Now, it's 128%. Yowzers. Now the GDP in 2020 was down because of COVID, and the debt, well, it's up due to COVID. And so this is just a challenge that everybody really needs to write their senators, their representatives, their House of Representative members, the president, and their local individuals. What I found is many states operate in the black, so to speak, profitably. And others, they continue to run massive deficits as well. And it turns out the states that are not running deficits seem to be in better control. And they just seem cleaner and better. And so I was thinking about this as I was preparing this current money event section and started sobbing about the debt. Anyhow, I recovered. Okay. I was thinking, what is the next number after trillion? Because we're headed there.
Yeah.
Yeah. So what is the next number after trillion? So this is going to be an ABC question. You ready?
I'm ready.
Is it A, quadrillion, 2, grillion, or 3, stratillion?
You can't even say number 3. I'm going to go with number 1.
What number 1 again?
Quadrillion.
Quadrillion.
Yes.
I made up the other 2. Grillion and stratillion.
You might have should have worked on your pronunciation.
My enunciation is failing here. But it's quadrillion. And I went up and looked at a bunch of others. And, I was always been interested. Google is a unit of measure. It's a 1 with 100 zeros behind it. And so that's another useless fact for today. But quadrillion. So luckily, right now, we only have 28 trillion. So we're 972 trillion away from quadrillion. But I'm telling you, at the rate we're going, sometime in our lifetime, as the Lord allows us to live a normal length of life, we might be hearing about a quadrillion of debt at the pace we're going.
That's wild.
So if you are with me, say no to quadrillions of debt, okay? And so
we'll be printing T-shirts.
We'll be printing T-shirts. That's it. No to quadrillion.
No to quadrillion.
That's it. Somebody needs to come up with that and send it to us. That'll be awesome. Megan said she will wear it at the next episode recording of the podcast. No to quadrillion. So that's it. I want you to really think about this because as you become my age and older, you start worrying about the next generation, right? If you're younger than me, you're worried about your generation, right? So it's very important to really let your voice be heard on this because really we have a representative government. They are representing the people that voted them there. And I can tell you right now, balanced budget, spend less than we make, no to new programs, cutting out a bunch of other programs that are even though they're good, right? They got to go because we are literally strangling our nation because of it. And that's what happens in a personal budget. What do you do when you're spending too much? You have to cut out stuff, even if it's great.
Yeah.
Have to go from 2 cars to 1 car. Have to go from the nicer car to the bump around car when it's got a few bumps on it, right? It's not because the other thing was not good. It's just you cannot afford that. And I feel like we need a financial reset. No to quadrillion. And that's what we're going to call it. And I love that we have podcast recordings because we come up with things in the spur of the moment. And it's no to quadrillion. That is it for today's current money events section. No to quadrillion.
There it is. I'm going to need you to close that screen because it's very...
Because it's going up.
It keeps going up.
You're getting, what is it, apoplectic or whatever?
Yeah. If you go to the usdebtclock.org, which we'll have a link in the show notes, you can watch the numbers just continue to go up.
They have an app too.
Oh, gosh.
It'd be even better.
And you can watch it too. Okay, our success story this week comes from Stephanie, and Stephanie says, thanks, Joe, for the FLE, so that's our financial learning experience, one of our events that we host at churches. She said, it was great. It is obvious that you have a passion for helping others. The most helpful thing, honestly, was the hope I walked away with. It's been many, many years since I've been hopeful about my finances. Since I've been managing my money poorly for as long as I can remember, I never realized how much stress I was under as a result. Just walking out of there put a spring in my step and a new motivation to make changes. I've already started changing some of my spending habits and cutting the fat with several of my expenses. It never even occurred to me that I could ever be financially stable enough to actually invest my money and create oxen of my own. Thank you again.
That is awesome.
Stephanie.
I really think for most people to move forward, if they're stuck, if they're in the struggle mode, the struggle bus, as we say, financially, Hope is the big thing that's lacking. Hope and encouragement. And they don't need scolded because they already scold themselves enough.
Yeah.
And here's the big danger of being broke and struggling is if you allow yourselves to stay there long enough, it becomes normal and it's what you expect and you don't expect what's different. And I love that we were able to be a catalytic moment in Stephanie's life of just helping her have this aha light bulb moment that says, hey, this stuff that he's teaching can actually apply to me. And I believe it enough to actually go try.
Yeah.
And that, for most people, is all it takes, is that belief that it can happen. You know, it says, as a man thinketh in his heart, so is he. I think that's how it says in the King James Version. So what are you thinking?
Yeah.
Because you can think, I'm going to be broke, and it takes the same amount of energy as I'm going to be wealthy. So why not, if you're going to think it, let's think something that's going to be better. And we know that wealth isn't going to bring you happiness, but lack of it can sure bring a lot of sadness. And so we really want to help people win to be able to live that fully funded life. Stephanie's on her way. Thanks for sharing that with us. Fired up.
Okay. Our question for today is, insurance is one of the most confusing topics ever. Can you please help me understand more of what I should be looking for? Also, any tips that would help me determine the best deal would be awesome.
Yes.
Who doesn't love a good deal?
It's a great question. Yeah. Yeah, we want a deal. And it's an excellent question. And thanks for taking time to write it. And first, let's talk about why insurance is important.
Yes.
Why it's important from a financial standpoint. You know, we know insurance helps you, get to the hospital and they take care of you and all that stuff.
Important, very
But the financial side of that is we're going to talk about two things really from why it's important from a financial standpoint. The first thing, number one, is that insurance transfers financial risk. So it just transfers financial risk. Like if you get injured in a car accident or you cause a car accident that injures others and yourself, there's health issues and insurance can't fix that.
Right.
But insurance can fix the financial side of that. Because if you didn't have insurance and you've injured someone else, you've injured someone's personal property, you've damaged someone else's car, their fence, their house, their whatever you ran into, right? For a nominal fee, the insurance premium that you pay, you can transfer financial risk from you to another party, in this case, the insurance company. So if you're at fault in a car wreck that ends up seriously injuring someone else and their property, and let's say it runs up a bill of $34,500, your insurance policy automatically transfers that risk to someone else.
Yeah. I don't know a lot of people that have $34,500 just sitting around waiting.
Just sitting around, can't wait to spend it on repairing that person's fence and their boat that I ran
car,
into.
Yeah.
So it transfers financial risk. And similarly, the second financial thing that is important is that insurance limits financial risk. So it limits financial risk. So it not only transfers it, but it limits it. And so for the same nominal fee, the premium that you paid, you can limit your financial risk to a specific number. And usually that total financial risk is your deductible, right? And sometimes you have a co-insurance thing that you have to pay up to a maximum out-of-pocket expense. But usually, for auto insurance, for home insurance, it is up to a deductible you have to cover. If it's beyond that, then they will pick up the rest. So that's what insurance does from a financial standpoint. It transfers financial risk and it limits how much your exposure is. Okay? So anything you wanted to add to that?
Yeah, I don't know. I mean, I think for health insurance, it's a little bit easier to see this. But when you look at your bill, a lot of times you see this huge number. And then if you go over one little column, it says like what the insurance allows or what the insurance is covering. And then it's like your portion. And I'm always very thankful for that column. Because I feel like it's the moment where you're living that and you're saying, okay, like the insurance is saying they can't charge me more than this.
Right.
Or they can't, like insurance is covering this portion because I pay them monthly. It's always a great feeling.
and it is a great feeling. And, we can all talk about our home and our auto insurance.
Yeah.
And that's what we're talking about today. We're not talking about medical insurance and all that stuff, although it functions very much the same way. But, I've luckily I've caused one auto accident myself.
Yeah.
And I thought this person had cleared a right-hand turn that was a yield. They started moving. I, in my mind, said they were gone. They decided not to be gone, and I ran into the rear of them. They ended up never filing a claim. It was just a little tap. But then, my daughter, I told her at Christmas Eve one time at Walmart, which is a horrible time to go to it was Christmas Eve day, and we're buying some stocking stuffers. And I told my daughter, who was younger, maybe 6 or 7, I told her, don't get out your side, get out Mama's side, which is the side where the doors to Walmart are. Do not open your side. She did not hear me, did not listen. She opens up her door, and it catches the side of a hub of a car.
Oh, no.
And I'm lucky my daughter was not smashed. It crumpled, just cremated the rear end of this guy's truck. He was slow moving, but he just kept moving, and I'm yelling at him, stop! And it's ripping off my door.
Oh, gosh.
It was awesome.
Yeah.
Limited my exposure. And, my daughter has subsequently had several other events. She had a tree fall on top of her car. In fact, in front of the home of the person that employs your husband.
It's true.
In the middle of the rain and the dark. I mean, it's just like crazy. And then another time she says she was not texting. She ran off inexplicably in the ditch at 15 miles an hour, but it was a deep ditch. And she hit a concrete culvert and tore the bottom of her motor off. And I can only imagine what that car ride was like, just blowing that car up. But, she had insurance.
Yeah.
And that leads me to the things you want to know when you're looking for deals, okay? So the first thing is the reputation of the insurance company. You can check with your state's Department of Insurance. That's a thing. Mm-hmm. And you can look at the reputation of that insurance company. What are the things like that come to mind, Megan, when you think about the reputation of an insurance company? What would make them get a bad reputation?
I mean, they're not willing to pay for, normal things.
For covered losses.
Yeah.
Like if they don't pay.
Yeah.
Or if they're slow in paying. Mm-hmm. What else?
Slow in paying, don't pay. Bad customer service for me
you
is
can't
always
get a hold of
a
them.
big deal.
They won't show up. Yeah, all that stuff, right?
Yeah.
They won't pay the person who fixed your car. They won't pay the person that fixed your house.
I mean, usually, and when you're having to deal with auto and specifically like home insurance, like you are needing somebody then.
Pronto.
Like you're not, it's not one of those things where you're like, yeah, this can wait until next week. Usually it's like, I've gotten a car accident, a tree's in my house, like something big happened and you're needing help then. And so I feel like if an insurance company isn't willing to call you back, come out and see it, or tell you where you can take your car, or, something like that, it's a big deal.
So somebody who experiences that poor customer service, failing to pay, won't pay,
the internet,
slow pay,
they're going to say.
Well, let me tell you, do you think they have energy to call the Department of Insurance to find out who they can call to register a complaint and get that fixed and remedied? Mm-hmm. Yes. They will Google everything they need to Google. And so that's a great place to check the reputation of the insurance company. And the second thing is to look at the financial strength of the insurance company. So, you pay a premium not because you just love them so much and want them to throw a party with your money every month, but you pay the premium because you want to transfer risk. And you want to know that company has enough reserves, it's also known as float, to be able to pay claims when the claims happen.
Yeah.
And it turns out when you have a claim a lot of times for your house, you're not the only one. The hailstorm affected everybody's house, right? The tornado affected a bunch of people, the windstorm, the flood, the hailstorm that affected the cars. And so you want to be able to cover not just your event, but a lot of people's events. Yeah. And so they do a stress test on these companies, and AM Best is the company that does this type of rating. And we're going to provide a link to AM Best ratings of all insurance companies so you can see the financial strength of the company that you're looking to potentially partner with to transfer that risk, that financial risk. So if you've done that and it's determined that all the insurance companies are excellent in reputation and financial strength, which, by the way, all the ones that I rattled off at the start, they're little catchphrases. Your good neighbor, State Farm. Yeah. You're in good hands, Allstate, Geico, all of these companies, Travelers, Cincinnati, Mutual Insurance Companies of Omaha or whatever, they're all excellent. Yeah. I mean, they would not spend all that money to advertise if they were not excellent. But there's a lot of companies that do work with independent insurance agents, and they're not household names, but they are excellent companies. Yeah. Like I was with Selective Insurance for years, but they their distribution network is not through television ads. They don't do direct to consumer. They do it through these independent insurance agents. And so if it's determined that they're excellent in reputation and financial strength, then it's time to compare policies based on a few items. Mm-hmm. So let's go through those items and talk about it.
Yep.
So the first one is what?
The first one is deductible.
Right. So tell everybody about what the deductible is.
Yeah. So basically, the deductible is what you're paying. So the higher the deductible, the more risk you bear. And the lower the deductible, the more risk the insurance bears. But it comes in what you're paying.
Right.
So,
so I really recommend this with cars. Is that you look at the deductible. A lot of times, there's not so much difference between a deductible of $500 and $1,000. Like the premium cost doesn't go down very much. Think about this. If you increase the deductible from $500 to $1,000, you've taken on $500 more of risk yourself.
Right.
The company has divested themselves of $500 of risk from $500 to $1,000. So now they don't have to pay for any claim less than $1,000. So your premium, if your premium only drops $25 for annual premium, you have to go 20 years with no claims to win that bet. But I'm driving my car around, so it's more likely to get into a fender bender, right?
Right.
I'm not driving my house around, right? And so a lot of times I've seen this a lot. Yeah. If you lower your deductible or increase it from $500 to $1,000 on your house, sometimes you'll save like $400 a year on insurance. Well, if you save $400, that's the guaranteed cost is the premium, right?
Right.
So you only have to go a year and 3 months to recover that extra risk. Well, I like my chances on my house. I'm not driving my house around. So really, the deductible is a big thing I want you to look at to get a deal. And a lot of people freak out about $1,000 deductible. And that immediately tells me they're in the struggle category of financial journey. They're very low on the ladder. Because if you have rung number 2, which is a month's worth of money saved up, or you're at rung 5, which is a minimum of 3 months worth of money saved up, $1,000, $500 extra dollars of risk doesn't really matter to you. Okay. So deductible is something really huge. What's the second thing?
All right. The second one is premium costs. So this is determined by the risk taken on by the insurance company.
Right. So when it comes to your car, they look to see if you have speeding tickets, how many accidents you've been in. Do you have a DUI? Don't do that. It's very expensive. And other things such as do you have any moving violations, like other type of tickets, non-speeding, like running a red light, failing to stop, failing to yield to a police officer. And it turns out that if you speed a lot, you have more risk of accidents. I know this is shocking. And so that helps determine the premium cost. Same thing for your house. It depends on what area you live in. Like if you live in an area that's susceptible to hurricane damage, much higher costs. Folks in Florida, Louisiana, Alabama, coast. Georgia coast, South Carolina coast where we live, North Carolina coast, right? So items that contribute to higher premiums are if you take the lower deductible option, that can increase the premium cost, higher coverage amounts. So a lot of auto insurance policies, there's a state minimum of coverage that you have to have.
Right.
But most excellent policies are 5-6 times that coverage. Well, some people just buy the state minimum. Well, that means that you're at risk of being sued for the difference, right? A lot of it's like $50,000 personal liability damage for personal injury for somebody, but a lot of them are like $300,000, $100,000, and $300,000 policy coverage. So higher coverage amounts equal a higher premium, and then of course your incidence rates or the risk of incidents causes the premium to go up. But what I like to say is the premium cost, that's what's guaranteed to happen. The deductible may or may not happen, right? And so the premium cost is something that I really want to look at how I can get that the lowest. How can I get my guaranteed cost to be the lowest? One great way is to drive safely, have few incidences of claims on my house, and get that higher deductible.
Yeah, there's a bunch of companies now that advertise like safe driving, or they'll like, have you gone this far without accidents?
Some of them actually make you have to have an app.
Yeah.
And it can track your location.
Which is wild.
And they track your speed against the posted speed limit and all that stuff.
Yeah. But if it saves you a lot of money,
why
not? If you know you're a good driver, then why not do it? Save you money.
I am an excellent driver. It's everyone else who is not excellent drivers. Yes.
Maybe.
Okay. Nice. No judgment
Hey,
here.
I've never been in a car accident with you. So
That's right.
That is a plus.
I've never been in a car accident with you. And we've went on some trips to these mountain houses for all these business meetings.
Yes.
And none of us have wrecked, even though we have done the sardine
have
can.
6 people in the car.
I love nothing more than putting 6 or 7 in a car that fits 4.
And
barely.
blaring the stereo.
Blaring the Southern gospel music. Come on, Bill Gaither.
Yes.
Get fired up.
Yes, we all can't wait to go on more trips.
Yep. I am going to plan 2 or 3 more, just like in the next couple months, just so that we can enjoy those moments.
Yes. Okay. Pray for us. All right. The next one is coverage provided.
Yes. So I just kind of mentioned that.
Yep.
So what is that?
Yeah. So automobile insurance has coverage called personal liability and property damage. So
if the limits are $50,000 per incident, as I was mentioning, the cost will be less than if the limits are $300,000 per incident. However, and the reason for that is because the insurance company has signed on for additional risk. So those are 3 things that I want you to look at to get a best deal. But as we wrap up this episode of insurance, I do want to share 4 tips on how to get the best deal. So the first tip is what?
The first tip is bundle insurance policies. So you
Bundle.
hear them talk about it all the time, but it really does help save.
Bundle your insurance policies. Like for real, bundle your home and auto. If you don't have a house, well then renter's insurance.
Yeah.
Because renter's insurance won't cover, like a lot of people make a mistake when they're renting a home. They think that the person who owns a home, that their insurance will cover their stuff. That's not true.
False.
It only covers the dwelling. Mm-hmm. So you have to have renter's insurance, which covers your possessions. Mm-hmm. It's very cheap.
Yeah.
Like $10-15 a month.
Yeah.
Okay. So bundle your insurance policies with same company. You'll save 10 to 30%. I do recommend that.
Yeah.
Okay.
All right. The next one is get quotes from at least 3 different companies.
Yes. So I recommend 2 quotes from name brand companies and 1 additional quote from an independent insurance agent. And to be clear, that independent insurance agent usually represents somewhere between 5 and 9, 10 brands. So that's why I like it. And it won't always be with that person, but I recommend you get quotes from these 3 companies. And here's one of the keys. Don't tell them what you're paying right now.
Yeah.
One slick way, little snaky way that they get how much you're paying is they ask you to send a copy of your current policy. So people just scan it in or just forward it to them, unwittingly showing what they're paying right now.
So they're like,
we could have saved them $700 a year, but we can give them $500 a year and they're going to be happy about it. And you will be happy because you will be none the wiser.
Yeah.
But you could have saved $200 extra, and I want $200 extra. So I want a deal. Get quotes from 3 companies, 2 name brand ones, 1 independent insurance agent.
Yep. Tip number 3, shop for better deals every 2 years.
Yes. I know it's not on even the top 100 list of most people to call and get new insurance quotes, especially every 2 years. It's kind of a set it, forget it type thing. But I will tell you, insurance companies are not loyal.
Yeah.
And they're much like cable companies in that they charge the most to the people who are the most loyal and stay the longest and cause them the least problems. It's the most frustrating thing in these businesses that they take advantage of the people who are most loyal and stay with them the longest. So since they are not loyal, I'm not loyal. So I go get new quotes every couple of years. And guess what? They start cranking it. A lot of people, they know that the insurance is being paid by their escrow account in their house payment. And they start cranking that up, and you don't even really notice $10 a month, $20 a month, $30 a month. And then you look at it and go get new quotes and find out you could be saving $500, $700 alone on your home insurance.
Yeah.
Pretty crazy.
Yep. All right. And tip number 4, obtain quotes with different deductibles.
There you go. So tell your person that you're asking for quotes, hey, I'd like to see this at 2 different deductible amounts. I want to see what the premium is at a $250, a $500, or a $500 and $1,000 deductible. I think you'll be amazed at how much money you could save just by increasing your deductible a little bit.
Yep. So at the beginning of the episode, when we said you might love this episode because it could save you money, these are the 4 tips that could help you save a lot of money. So I'll include them in the show notes, but make sure you're checking these out. Make sure you are hitting all 4 of these tips. If not, go back and listen to the section about the tip that you weren't doing and do that.
Excellent.
Yeah. All right. Our quote for today is from you.
Yes.
Yeah. And it says, your emergency fund is a form of insurance.
And it is.
Yep.
So we talk about rung 2, which is 1 month's worth of money in savings. for emergencies, for those unplanned, unexpected emergencies. And then in rung 5, building that to a minimum of 3 months worth. It really functions as a form of insurance. Just like the insurance company stacks up money, right? In knowing that a claim is coming from someone, maybe a lot of claims. That's what your emergency fund is. It is there to transfer risk. What is the risk? That life could happen. Your car could break down. You have to leave town on an emergency trip. You have illness, and you get to transfer the risk of that event, derailing your move towards your fully funded life.
Yeah.
It allows you to absorb the financial side of that. Your refrigerator can get repaired, the car can get fixed, and you can keep headed on up the ladder to your fully funded life. So that's it. Your emergency fund is a form of insurance. You become self-insured. Get fired up.
All right. Our next episode, we're going to talk about the power of the IHHE moment.
Yes.
So if you've been around a little while, you know what that means. If not, it's I have had enough moment. So in this episode, we're going to switch it up a little bit and talk about one of the biggest things that has helped Joe and a lot of us, honestly, to achieve great things in financial journey. And it's called the IHHE moment. So don't miss it.
The I have had enough moment. We know what happened when mama had enough. We know when we're the mama or daddy and we've had enough with our kids. Well, we're going to apply it to our finances. It's going to be kind of a motivational, inspirational, kind of left foot of fellowship, kicking us down the path to say, I have had enough and I'm going to move forward in my finances. Hey, if you like today's episode, please help us get this podcast to other people who could benefit. You could do that by quickly rating our podcast, leaving a review. Those rating and reviews bring exposure to the podcast. You're watching on YouTube, you can click the like button or the dislike button if you didn't like it. Leave a comment. Tell us why you liked or didn't like it, or any other tips that have helped you in your own insurance journey. And of course, you can click the subscribe button. If you want to be notified as soon as a new episode comes available every single Monday, click the little bell. It'll notify you via YouTube. And if you've implemented one of your tips, please share your success stories with us. You can email us at info@iwbnin.com or by hitting us up on any of our social media outlets. Until next week, next Monday, you've got 7 days. Go get new quotes, and hopefully you'll be on your way to saving money. And, 15 minutes or less, it could save you. Get fired up.
Thanks so much for listening to this episode of the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. If you enjoyed today's episode, please leave a review and subscribe. And for more great content and to stay up to date, visit iwbnin.com. We'll catch you next time.